Welcome to another episode of Market Watch on the Property Frontline. Today I'm here with Scott Hoaxang and we are covering off the performance data of the Australian property market to the 30th of June 2024. So can you see that, Scott?
Yeah, I can see it fine.
Okay. And so what about this? Yeah?
Yep, all fine.
All right. So will we just review the houses side of things? And so did you want to run through that?
Sure. Quick run through of the various capital city markets here. So as Deborah has said, these are annual growth rates through the fiscal year ending June 30th, 2024. Starting with our favorite here, Sydney.
Yeah,
House prices were up 6.8% for the year. Pretty decent performance. Slipping down to Melbourne, houses up 1.2%. Certainly lagging inflation there. Moving over to Brisbane, we're at 15.2%. Quite a stellar performance. And Adelaide, very similar, 15.1.
for the 5 houses available in Adelaide. No,
Yeah.
I'm joking. Anyway,
And
yeah,
of course, the star for the year is Perth. Reading all
mm,
about that in the media, 23.7%. Wow, and
yeah,
your house going up almost 25% in 1 year.
yeah, incredible.
Very impressive. Smaller capital cities, Hobart, lagging a bit, basically flat. We're at minus 0.3%. Darwin slightly up 3.1%, and Canberra and our friends over in the ACT just lagging inflation at 3.2. It's really kind
Yeah,
of mixed bag of performances, honestly, and it makes the point that we've got many markets moving at different paces here in Australia.
yeah, exactly. Yeah, okay. And so this is the SQM asking prices. So what's the best way for us to run through this? Should we just do what we did, all houses? So for SQM, they say Sydney houses are up by 7.7, Melbourne up by 6.1 for the asking. Just that's weird, right? Anyway, we'll dig into
Yeah.
that later. Houses, for Brisbane, SQM says is up 15 .6%.
Yep. Very.
Then Perth, sorry, what?
Yes.
Then Perth 21%, Adelaide 16%. So they record quite a divergent performance from Core Logic, I think. Canberra houses 16%.
That that's definitely a bit of an oddball, I have to say, and I think one
It
we're gonna have to
is.
dig into a bit because I have
Yeah.
not seen any numbers for Canberra over 5%. So I wonder what Louis got cooking in that figure.
I'm wondering because, like as you said previously, these are asking prices and
Mhm.
whether they discount more in Canberra.
Yeah, it
Like
wouldn't
the
change
stuff.
the growth. It wouldn't change the growth rate though. I mean, because if you
Uh,
count at a set rate each period, it you'd still, I mean, you'd still see the right growth rate. Uh,
yeah. Okay. And then Darwin houses negative nearly 4%. Hobart houses little bit of a bounce almost to 1%.
yeah.
And then, yeah, does that cover everything? Yeah, okay. So let's dig into that a little bit more. So I guess the point that we said we would make here is that this is dwellings because we like to use this graph because it's so much easier to see the differences. The source it's drawn from is Core Logic, but where we were talking about just a moment ago, houses, this includes all dwelling data, including units and townhouses. And so what would we like to say about this, Scott?
Look, I just want to say something I saw out in the media. This was
Yeah.
widely reported out in the news. It said the the average dwelling went up $59,000 last year across Australia, which
Oh, don't you
you
love
sort
it
of
when they make
which you sort of do the math on that. Everybody's thinking, well, maybe I don't need to work anymore because my dwelling's making, pretty good income for myself. That's
mm,
$161 a day, by the way. But
yeah.
kind of drilling into it, really, you will really see that there are some people that are doing significantly better than that, and others that have really had no gain at all on their property.
Yeah, such a silly statistic, but gets the headlines, doesn't it? Yeah. And so, look, from my perspective, the drama is here in Melbourne. Like, when have we seen in all of the historical data that we can access, when have we seen Melbourne be so far apart from Sydney? Or when have we seen Melbourne be one of the worst performers nationally?
Yeah.
So what's the purpose? I know you have your view, I have mine. But yeah, do we what's my next slide here? Oh, this is per month. But yeah, really, there is a drama there. And so people who are thinking about buying, because some people see this and they think, oh, Melbourne prices are dropping. There's some opportunities to get maybe some discounted properties. But is that really the way to go if Melbourne's got more value growth coming to it? And
Yeah.
I really think it has. So we believe the key cause, like some people have said, some economists have said that, oh, it's because Melbourne is building more houses. It is not that. I don't think. And so, did you want to cover off this issue of taxes?
Sure. I think, a lot of this negativity in the market is driven by state government actions over there, and the largest
Mm,
one is a change in taxes targeting homeowners and investors. The largest change really has been a 10-year COVID tax that's been implemented using their land tax system. They used to have a threshold of, I believe it was 300,000, and they've dropped that all the way down to $50,000. I mean, that picks up just about everyone who's an
mm,
investor over there. So you may not have been paying any land tax before, and now your first land tax bill is showing up. And we've got
mm.
totals here: 380,000 landowners affected, $5 billion raised. That is all coming out of the pockets of property investors specifically, because most home buyers are going to be exempted from these taxes. And it's happening at the same time. We've seen large increases in interest rates, and just a real squeeze on property investors in general. So um,
Yeah.
I, I, I would
And
certainly point toward this as being the leading factor.
yeah, and there's that extra COVID tax that they introduced. What was that one?
Um, well, sorry, the change in land taxes is the 10-year COVID levy that they talked about, but
Oh, okay.
there's
Mm,
several other new additional taxes that are just sort of weighing in.
mm.
They range from uh,
Oh, yeah.
absentee landowner taxes for people who are leaving their properties vacant. Even investors that are, building houses, are getting taxed during the build of their
Oh,
house. So it's just a bit of a pile on, I would say, in Victoria, and
yes.
understandably, some people are probably being pushed to the edge.
Yeah. Well, let's look at the other side of it. So, because as we've talked about, some people are saying, well, um, that means that homeowners will be able to get into the market a little bit more easily. But what's that doing to rental supply? And so, looking at this is rents from SQM, and so where despite land val or property values going down in Melbourne, SQM has the rental pricing going through the roof in Melbourne.
Yeah,
Um,
a very strong rental growth after, I would say, a couple of years through COVID of rent falls and quite a flat period.
but it
Uh,
also means that if investors are selling out of Melbourne or selling out of Victoria, then there's less rental properties available. Rents are going up. And then, so if you're trying to save to buy for your home, it's harder because you have to pay more in rent. Does that
Definitely. Yeah,
equate to you?
yeah. I think, there's probably two sets of homeowners, wannabe homeowners over there. The ones that are quite cashed up and have saved up quite a lot, and they're looking for a good opportunity. But there's sort of a vast number that are just struggling to save while their rents are rising and probably would like to buy in, but just are having a lot of difficulty saving up the deposit and, of course, getting a loan, at these current interest rates.
Yeah. And of course, this is backed up by the tenancy bonds data. Did you want to cover this off?
Sure. Look, just briefly, we track rental bonds data across different states. Rental bonds are what's paid by a tenant whenever they rent a property. It's typically 4 weeks of rent paid to a government body or some safe place that holds that money. And actually, we can get the totals in several states and look at how many properties are actually available for rent. And this chart on Victoria really shows what is happening over in the state. If you can just envision the number of rental bonds being equivalent to the number of total properties that are rented over there. Um,
Mm,
seeing a decline of literally 10,000 properties disappearing from that rental
yeah,
stock. Um, while at the same time they're building new properties. In a typical market, you would see a slightly rising number of rental
yeah,
properties over time. Um, it's actually that
yeah,
bad in Victoria that fewer properties to rent overall.
yeah. Yeah, so maybe what we should do is just look at the at Google Maps. Um, so what's your view then about, are you a buyer for Melbourne going forward, or are you
The vast majority of our clients are investors and not home buyers. And look, I would have to say we are still staying away from the market. Just a perspective of better opportunities elsewhere. It doesn't mean there aren't a few people that are dabbling in the market, maybe attempting to time a bottom, but
mm,
we just um, don't like trying to make that type of guess.
yeah.
It's
But
actually
if you're a
very,
cash
very, very, very good prices over there. Just one note, I will say, I've had a few people who have come to me saying, we want to buy a house, in the 500,000s, in the 600,000s. And we have done many searches through Queensland, through Perth, through
mm,
Adelaide, and in some of these outer suburbs of Melbourne, we're seeing some of the cheapest new builds, in the country across the capital cities. So um, if you do want to buy a house in a capital city and you're on a very limited budget, there may be a few people starting to take a look at Melbourne. That's really how this all starts.
yeah. And so if you are a cashed up home buyer, it is maybe something that you would think about. But we just don't know how long this is going to continue and how bad it's going to get, because while it might look like the returns, if you're an investor, might look like the returns are going to be a little bit better, you need capital growth and good cash flow to be successful. Because if you buy in, say you buy in at 500,000, who's to say it's not going to be 400,000 very soon? So what does that do for not only the overall wealth, but for an investor, it's bad unless you're doing it as a cash flow strategy.
Yeah.
Um, but if you're a home owner and you've bought in at 500 and it drops to 400,000, that is not good for your borrowing capacity or your financial position.
No, you're
Um,
you're
mm,
probably underwater on your mortgage.
yeah, that's right.
And
And
certainly not in a position to use equity and buy other properties. So it really does affect your entire property plan.
yeah, and or even if you needed, you wanted to do other things, not necessarily buy property next. Um, but the worst part about it is the stupid state government hasn't thought about what's going to happen next for them. Because if home values, property values go down, well, then the government can only collect, well, they'll have to collect less taxes. And so it just drives the whole thing, the whole economy down. And while, we don't want to make things harder for home buyers, like taxing the hell out of property owners is not the way to do it. And what I think is actually happening, or my view about what's happening in Victoria is you are um, like the government will say they're doing all they can to help you until you buy a property, whether you're a homeowner or an investor. As soon as you do that, government just looks at you as the villain. Really? You become a villain in Victoria if you own a property. And then like how's that going to go for their political position as well? If there's more property owners in Victoria than there is renters, once again, we want to help renters, but the
Yeah.
way to do it is with more supply and not by causing people to want to sell out. Just don't understand it.
No. And I just don't think there's too many places you will find historically that have had falling house prices and a booming local economy. As much
Yeah,
as we'd like to have that story that home buyers can buy in at a bit of a lower price, if it does come at the sacrifice of declining job prospects, and a negative overall market, I just don't really know if you're getting ahead. And we've already highlighted the rising rents that are occurring there that are making it even harder to save to actually get into one of these properties that may be a slightly good deal at the moment.
yeah, yeah. And so, like, I buy for homeowners as well as investors, but um, like we're like you, we say, well, there's better places for you to put your money, and so that's just making the whole situation even worse. I can't see them fixing it at least for the next 12 months. What about you?
Yeah, probably the same. And
Mm.
the only real opportunities we have looked at have had 12-month time frames on them. Maybe commit to a particular property that might be built in 12 or 18 months.
Oh
So in
yeah,
a sense, you're able to ride through whatever happens in that time frame and come out in potentially a better market, but there's no guarantees.
yeah.
Um,
Mm. Oh well, that's tricky. So I guess we should wrap up. Um, so thank you very much for visiting us here at the Property Frontline. If you would like more information or would like to contact Scott or me, our details will be in the description. Is there anything you'd like to say, Scott, in signing off?
we just want this cold weather to end in Sydney, everyone. So hang in there and a lovely
Mm.
school holiday break, and everybody do their property research and spend some extra time working on your plan for this upcoming fiscal year.
Yeah. Okay. Alrighty.
Goodbye, everyone.
Bye.